and welcome to the Market Outlook webinar. If you're watching the recorded version of this, it was held live on Wednesday the 12th of October at 12:30 in the afternoon. This webinar gets held every Wednesday at the same time in conjunction with EURGBP markets, and it's a look back at maybe what's been moving in the major markets, the currencies, indices and commodities over the last few days, and what to look out for in the days ahead, looking at it from a sort of charts, technical analysis angle, where the opportunities might be. It's been an odd week with the pound flash crash, but we'll come to that in a second. Before I start, I just put the risk warning up so you can read that at your leisure. Every other week with EURGBP as well, in the evenings, I run a webinar on social trading, because although EURGBP you can spread bet normally and trade CFDs normally, they also have a social trading offering. So I run that. The last one was actually on last night, so I'll put the recording of that up on my Twitter feed a bit later today, but the next one will be a week next Tuesday. But this webinar runs every Wednesday lunchtime. So without further ado, let's get into it. I think we've got to start with the pound because of just the moves we've seen over the past week. Just to remind ourselves where we are. This is from June. This is a 4-hour chart, so each candle represents 4 hours worth of trading. This is using EURGBP's Trade Hub platform. And of course we had the fall off on the Brexit. I wonder how many times we have to keep going back to that. So the Brexit fall off, the market found a base at 128. But I think, as we mentioned a few times on this webinar, 135 had been a problem. But then it lost the 128 level, and I think I said last week, I was surprised. I thought the lows were in after the EU referendum vote had happened, but it was following, I think, what was said starting off at the Tory conference the weekend before last. We saw the pound under a fair bit of pressure at the beginning of last week, and of course that all culminated. Was it last Thursday? The flash crash. Let's have a look. So, in case you missed this, I think if you were reading a paper or on Twitter, you couldn't really miss it. So we saw the moves in the early hours of the morning. Hang on a second. Let's take this out a little bit. There we go. Can we get it? There we go. So we were looking at here the moves. You can see the early hours of the morning of October the 7th. The most dramatic move, where it went from 126-ish, the pound against the dollar, and traded down to around about 118. I think there is the jury is still out, I think, with some people as to where the actual low was, but this happened in the space of 20 minutes or so. Absolutely incredible volatility. Now it's referred to as a flash crash. It's similar to what we saw on the Dow back in 2010, where I think the Dow lost something like 700 points over the course of 20 minutes or so. And there's all sorts of speculation as to what caused this, and it is quite frustrating, really, because the reality is nobody knows. There was, I think, the sort of knee-jerk reaction was it was the classic fat finger, that someone's typed in a couple of extra noughts when they were selling. Then it was algorithms, the robot traders selling, sort of forcing more selling. But probably, I think I've read another one today in the Times, and I think it is probably that it's something of a freak event. And because volume was so thin, it was the handover time or the crossover between New York and the start of Asian trading. And apparently there were a significant number of orders, much more than usual, that hit the market. Volume that time of day is thin, and the market just collapsed, as we saw. So a freak event, and after a particularly poor week for the pound. So the pound, like Deutsche Bank the week before last, the pound was the main topic of conversation last week. We did see, a partial recovery, but you can see, since that crash, it didn't get back to where it was, to the 126 levels from before the crash. It drifted lower, and again last night during the New York session, we saw it lose ground once more. It has bounced back. I think again we saw a move that started in the early hours of this morning for the pound against the dollar. I think on suggestions or leaks, not leaks actually, suggestions that we're going to have. I think Theresa May is going to have maybe more of a debate about what our Brexit is going to look like. So we've seen something of a recovery for the pound, but it's it's still weak. I think the fact that if we were going to try and build a positive argument for the pound yesterday, then it would have been, if it had stayed above that sort of post flash crash low, around about there. But you can see in New York trading, it did slip below that. So I think it's still very, very, very vulnerable. As ridiculous to me as it seems that it's down around about 122 to the dollar, it's a market that's still weak. So whilst the temptation is always to sit there and think, well, it can't get any lower, clearly this is now an hourly chart we're looking at. It clearly can with the pound. We've got just over this time horizon here, just for this month, we have a definite downtrend in place, depending on where you take your trends from, but I think it sits at the moment, something like that. So I'd suggest we need to see, based on this, a rally through at the very least 124. Personally, I don't think I would even contemplate buying or starting to look for buying opportunities until it got over this sort of post flash crash high at 125. So I think it does look like there are plenty of barriers in the way of a pound against the dollar rally from here. I think it's an odd time in markets the last few days. We have seen quite a lot of dollar strength, and we'll look at some other currency pairs in a minute. But I think because there is speculation now that the US central bank is going to raise rates fairly soon in the US, regardless of who wins the election. Clearly, with some of the what some people might say gaffes that Mr. Trump has made in recent days, and Hillary Clinton pulling away in the polls, that's confirmed, I think, the market's view as to which way the presidential election will go. And again, that would suggest we should get a rate rise in the USA. So that's definitely helped the US dollar against some other currencies. But clearly the pound's had its own particular issues. And it's been Brexit, the Brexit talk, more than anything, clearly, that's driven the pounds over the past week. So who knows what the next 7 days will hold. But I would be, I would be very wary of rallies back up into this whole, 123.50 to 125 zone. I'd be worried about them running out of steam. So I think there will be a time to buy the pound again, but not today. I think would be my view on that. I think we need to see things calm down. What's also, I think, maybe could see markets marking time a bit. Later on today, we've got the minutes from the last Federal Reserve's meeting, the last meeting of the US central bankers. So they're released, I think it's about 7 o'clock, is it? UK time, I think, this evening. So again, markets will try and second guess exactly where we are or what they're thinking about in terms of a rate hike. Let's move away from the pound against the dollar, because it is a little bit of I think, just a crazy market at the moment. Let's look at the euro sterling, and it hasn't really changed, from last week. Clearly, as the pound has weakened, we've seen an increase in the euro against the pound. There's been this trend that's been in place now for almost 12 months. So I think just despite all of the shenanigans maybe in recent weeks, I'd suggest that the default position for euro sterling has been to be a buyer. That trend clearly has accelerated in recent months. Now looks something like that. Let's flick it over to the hourlies and get a better feel for maybe what the intra-day trend is. But for me, on euro sterling, I'd still definitely be inclined to be a buyer of dips, rather than trying to pick the top in euro sterling. So if we go back to the beginning of September, our trend looks something like that. Since then, the trend has accelerated once again, and we are where we are. And actually, looking at the RSI, even though I'm not a massive fan of things like RSIs, because I think they can give somewhat premature signals, clearly euro sterling has come off about 100 points over the last day or so. It's come back from above this 91 level back to trade around about 90, where it is at the moment. So we've been up to 91.28 last night, and it's come off, and we're now trading back here on the trend line. So for me, technically any weakness in euro sterling still looks like a buying opportunity. And I think if it comes to placing stop losses, then the closest I would want mine is below this last low here, around about 8,900. And then further out, even if we saw it pull back to here, it doesn't change this trend over the last 6 weeks or so. So I think that the bias for euro sterling is definitely still to look to be a buyer. And tying up with that, actually on the hourly chart, we went a bit oversold on the RSI this morning. So an RSI, Relative Strength Index, is a traditional overbought, oversold indicator. When it's above 70%, the suggestion is the market's getting a bit overheated. When it's below 30%, the suggestion is the market's has been pushed down too far and is due to spring back. Interestingly enough, this is the first oversold signal we've had in October for the RSI. So the last time we had an oversold was back here, end of September. And in a trend, the signals that go in the direction of the trend are normally thought to be more reliable. So if we had a downtrend, sell signal should be better. In this example, because we've got an uptrend, then the buy signals are usually, and it has proved to be the case, more reliable. So it's interesting that we had one here early hours of this morning when the market was trading at around about 89.60, 89.70. I suppose an aggressive stop, a really aggressive stop, based on the hourly chart, would be to be a buyer with a stop under these overnight lows. If you really thought, it's got knocked down yesterday and it's going to be off to the races again, that would be the more aggressive trade here. There we go. You can see how those lows held the early hours of the morning, held again around at 9 o'clock, and they've held again about an hour ago. So the aggressive trade would be to be a buyer now with a stop under there. But on the hourlies, I probably prefer mine a little bit further away. But saying all that, the trend for euro sterling is still up. So the bias would be to be a buyer of the euro against the pound. Euro dollar is interesting at the moment. There's a lot of trends look like they may have changed in the last week with this dollar strength. Euro dollar had been going nowhere for quite a while. This is a daily chart that we're looking at now. So it had been, pretty broadly flat during the summer and September. But in the last couple of days, it's broken below what had been really good support. We can see if I chuck a couple of big lines on here, big levels on here. What do I want? Horizontal, high and low. There we go. So if we, clearly we had the level from back there. Oh, hang on, have I put it in the wrong place? Horizontal highs and lows. So if I go to here, so one sort of 120 level, and then these lows from back here in August. So I think euro dollar is an interesting one to watch at the moment because we're pulling back to these lows from June and July that did prove to be quite the turning point. So I think, going into the rest of today, euro dollar still looks weak, but it'll be interesting to see what happens if we start nudging back to these sort of levels down here. Because I think if we took the chart out, they're fairly important. They're the lows since February this year. So it'll be interesting to see how euro dollar performs if it does start nudging down to 109. Personally, I would be looking for a bounce ahead of that 109 level. But let's see, it's still pretty weak today. So let's see how the rest of today goes. But I think euro dollar, like lots of currencies at the moment, suffering because of that dollar strength. One that we've looked at now and again in recent weeks, and I'm going to look at it today because I think it's interesting from a longer term perspective, is the New Zealand dollar, US dollar. Let's just take this out a little bit. How far should we go? Should we have a look at the last, if we can get the last year or so? Because we've used it as an example of a currency pair with a good trend, and you can see that the trend had been down, but the trend since last September, so for a year now, has been up, but it has come under some pressure in recent days thanks to that sort of increase in value for the US dollar across the board. So our trend from back then looks like that, and we can even have it accelerated. So this is New Zealand dollar, US dollar, to look something like this. And it's interesting because we're coming back to what had been pretty good support beginning of July for the New Zealand dollar against the US dollar, and also is the trend line support that's held in place for much of this year. So let me just flick that back over to a daily chart and we'll see. So the levels, I think the big levels to look at on New Zealand dollar, US dollar for me is this low down here from the third week of July, which is sitting around about, what's that, the 69.50 sort of area. So it's only 100 points below where we are now. But again, I think like the euro dollar, New Zealand dollar as well at the moment is coming up to a level that had proved to be pretty pivotal in the past. So it's going to be interesting to see how these markets react around here. But like the euro against the dollar, I'd be looking for a bounce off here. So I think it's an interesting one to watch over the next couple of days. And then maybe we'll see these levels tested tonight with these the minutes out of the Fed later on this evening, UK time. But for me, that trend in New Zealand dollar, US dollar is still up, and I would expect that level to hold. But I want to see some strength before I'd be a buyer. And I think at the moment, if we looked on the hourly chart, I'm guessing that that's still going to be pretty weak. There's our hourly chart. You can see the size of the decline just in the recent days. So it still looks, it tried to recover and it's just broken down, and it's broken down again overnight. But I think it's an interesting one to watch over the next couple of days to see how it performs down at those levels. So I think it's all a bit of a mixed picture for the currencies at the moment. I think the only one that caught my eye again this week as one that's maybe interesting now is the dollar against the Canadian dollar, because it's threatening this big level. Just a few days ago, it looks like it's maybe breaking out. So we'd had the dollar Canadian dollar, so a decline here for the first 4 months of 2016, then a recovery, but it struggled really to make much progress past 132. But again, in recent days, it's been trying it again. So I do wonder if for the dollar versus the Canadian dollar, is this the start of a much stronger recovery? And I think the problem with breakouts is, well, when do you classify it as a breakout? We've seen it have the odd little flurry. You can see it there. Let's zoom in. It's had a few little false breakouts over the past month or so through 132, and it's pushed a little bit higher again last week and come off. But I would still be inclined to be a buyer of the dollar against the Canadian dollar, I think, based on that, because it does seem to be just trying again and again to push its way higher. As usual, the question is, let me just zoom out to the sort of view I want. The question is, where does your stop loss go? And I think it's a difficult one to call when we have, quite a bit of volatility like this, where it's moving more than 100 points a day. Maybe it's we want to wait for a better signal, a cleaner signal from the breakout. But for me, for the dollar against the Canadian dollar, I think I still be a buyer on weakness. But I do think currencies are a bit more mixed up over the last week because we've seen a resurgence in the dollar. So I think it's pretty hard to call any clear trends apart from euro sterling. I think once you take the dollar out of the equation, you get a much better view. So euro sterling, clear uptrend, but everything else is, well, will it or won't it hold on certain levels? So I think we'll have a much better picture in the next couple of days. What is interesting at the moment, and I think it's maybe a more immediate one for this afternoon, is what we saw with stock markets yesterday. So let's start off by looking at the Dow. I was watching this last night because we did the social trading webinar last night, and there's some odd moves over the last couple of days. If I just take this out, because first of all, on what day are we today? Wednesday. So on Monday, this is the Dow. We'll have a look at the S&P as well in a minute. On Monday, the Dow moved to a fresh high for the week. So it managed to surpass these old highs from back here around about 18,375, and sort of pushed up to 18,400. So I thought, okay, well that's it. It suggests that maybe we could see the Dow move a bit higher in the days ahead. And of course, what happened yesterday? The market promptly reverses and set a fresh low for the week. So we've had almost more volatility in 2 days than we've had in all of last week for the US indices. But it's interesting because of where it brought us. And I was putting this on Twitter last night, because you'll see, I know I do sort of bang on about these big levels, but you'll see just how this worked yesterday. We had that big sell-off towards the end of September on a Friday. But the market, the Dow, did turn around in the sort of the 18,050 area, and then it rallied up to 18,350 end of September, then back to 18,100. Basically, 18,050 to 18,100 ended up being a key area of support for the Dow. And it's exactly what we saw yesterday. The market traded down almost to the spot, almost down to 18,050. And it's bounced back. It almost last night had bounced back 150 points. But I think so the test for today is, assuming this level is going to hold again, we shouldn't see much weakness in US markets today. Obviously, we've still got those Fed minutes later. But if this is, a valid hold of that support, and at the moment, there's no reason to think it isn't, we should see US markets, famous last words, over the next few days, start to try and claw their way back up again. So for me, if we did see any weakness, back towards 18,100 on today's open, it looks like a buying opportunity. Just to put this in perspective, if we have a look on the dailies, it's been, a pretty sideways market. There we go. So that was the big sell-off. This is a daily candle we're looking at now. That was the big sell-off in September. And the market's just been bang, 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 pretty boring. And that was yesterday's move. You can see how a relatively volatile day it was compared to what we've experienced lately. But you can also see how the market's been underpinned by these levels back here. So I think today is going to be interesting. I would expect those levels to hold. If we look on the S&P, as I said before, is a much broader US stock market index. Arguably gives us a truer picture of the US stock market rather than the Dow. The Dow is just 30 stocks. The S&P, as its name suggests, is 500 stocks. But a similar sort of thing on the S&P. We have lots of support just below where we were trading yesterday. So that was the first level, 21.29, and then much bigger support out down here, wherever that is. There we go. 21.15, and then again down here around about 21.10. So there's lots of pockets of support for US markets down here. Assuming they're going to carry on trading in this trading range, I would expect these markets to rally today. Let's see. But I think we could see a quiet afternoon, a quiet start because of these Fed minutes a little bit later on. But there's I think some very big support to watch in the Dow and the S&P. The FTSE, of course, is doing its own thing for a change. So the FTSE, as the pound has been weakening, the FTSE has been pushing higher to fresh intraday highs at least. There we go. So that was, I think it beat the old highs. Was it by 15 points or something yesterday? I can't remember. But it's pushed a little bit higher. A weaker pound, means that plenty of the international companies that make up the FTSE, their profits should be helped by the exchange rate. I think it's a bit, even though it's quite, I suppose it's quite headline grabbing that it's making fresh all-time highs. It's a little bit boring, I think, day to day. But you can see how, clearly, again, you'd want to be a buyer of the dips, and I don't see anything to change that. I think the 7,000 level has helped prop up any weakness over recent days. Just was that a couple of days? Was it yesterday? Yesterday, October the 10th, we saw the market in the morning dip to 7,020, then rally up to 7120-ish, so put on 100 points at that level. What's it done today? It's hit those lows from yesterday, and it's on its way back up again. So again, for me, I would want to be a buyer on weakness on the FTSE until these levels break. For me, that's maybe the bigger level to watch is back here, which is 7,000 near enough, 69.98. But any weakness by the FTSE towards the low 7,000s looks like a buying opportunity. But I still think the US markets in the short to medium term, I think arguably look a bit more interesting than what the FTSE is looking like at the moment. But definitely the bias is still from the market to move higher. The other big mover last week was the price of gold. We saw the price of gold fall off a cliff last week. And I think it's interesting because although it's not really done much since then, since it absolutely plunged, it's interesting to see how it performs around that 1250 level. I think some of the moves that we've seen over the last 12 months, do suggest that finally that sort of multi-year decline in the price of gold is coming to an end. You know, we've seen the trend. There we go. Let's just get a picture, get a look at the big picture. There we go. We've seen that decline from these levels in 2011 down to these sort of below 1100, end of last year, beginning of this, and the market clawing its way higher and breaking some important highs on the way up. So for me, I still sort of want to think the trend for this year is still just about up, even though we've broken below that trend line. We're sort of holding on the previous support level. So I think for me, it's around about 1250 is the big one to watch for gold. And clearly, yeah, this one of the reasons this was pushed lower is because of that dollar strength again that we're seeing across the board. But I think we have pockets of support for gold, 1235, 1250. So it seems to have had, you know, a period of somewhat marking time. I think since that sharp fall. Let's just scroll over to the fall. We've seen it marking time. But I think if it can hold above those lows for last week, there's a chance for it building a base and starting to move higher again from here, starting to recover back above that 1300 mark. But it's another one that's a little bit of a wait and see, I think, at the moment. I think for me, for my money, the next few days, stock markets are still the more interesting markets. And finally, let's take a look at the price of oil, because this is again near something of a big level. So let me have a look at, let me make sure I've got the right contract for the price of oil. Which one do I want? Do you want Brent or the US oil? Is it US December? It's a December contract. Let's have a look at it. Because it's near a big level, you know, it's just to remind ourselves where we've been this year on oil. You know, clearly it's been as low as $26 a barrel a little bit earlier in the year. I clicked the wrong thing there. And now it's trading back up above, oh, hang on, it's the wrong contract. Is that December I was picking? Let's go for, yeah, November contract. Okay, there we go. Right, so we're back up to the summer highs, and I think it's an interesting level up here. If you wanted to go short oil, then this is the place to go short. You know, if you thought that the bounce that we'd seen earlier this year was something of a false one, back up to 52, the market did sell off to 40, and that's a 30%, well, not 30%, 25% decline. The market's pushed back up again to this previous big level. So if you wanted to go short, it's the perfect place to go short, because you're short at 51 with the stop loss just above those old highs from June. So it really is sort of bounce or bust time. So 52.28 are the June highs. So let's say you're short at 51 with a stop at 53. You've got $2 risk, but if you do think it's going to do the same thing again, you've got $11 potential profit. So it's an interesting level, I think, for the price of crude. And I don't really know what I would do. I suppose it is fair enough to go short, because it has spent a couple of days faltering up here. The risk reward for the trades is an attractive one, and it's whether it starts as usual to break down from these sort of levels. Let's have a look on the hourlies. Maybe let's see where you can find a somewhat more conservative approach, because you could clearly still argue the trend from those lows is still up. So even though it's hit a big level and it's sort of marking time, you know, if we were going to draw our trend line in, it's still in that trend line. So maybe the more disciplined person would wait for it to slip below at least $50.40. If not below 49. But I think it's an interesting level up here, and $52.5 is the big pivotal level. Now, let's say that it doesn't fall and it breaks 53, then it's a classic chart breakout, isn't it? A bit like this was a failed chart breakout back in June when it broke above the October highs. If it breaks 52.5, 53, I think we have to start looking for a sort of a $10 move up to here, up to this sort of congestion zone from May last year. So I think oil is the other one that's maybe the more immediate market to watch. I think the FX markets are a little bit up in the air after the dollar strength we've seen recently, stock markets are interesting because we're back down to the lows that have held the markets up all over the last month. And oil's interesting because we're back up to the highs from June. So I think there's a fair bit of, there's maybe a bit more stuff to watch rather than actually do, I think. But hopefully when we get these Fed minutes out of the way tonight, we'll see markets returning a bit more to normal and see how that affects the US dollar against the likes of the euro and of course the pound. But we'll wrap things up for there. Like I say, the one I'll be watching is going to be stock markets, I think, because we are back on those levels. For market updates and charts and when markets get to big levels, if you follow me on Twitter, I do try and put charts out, like last night when we were getting near these big levels in the US. So my Twitter handle is @JonesTheMarkets. If you've got any questions, drop me an email. My email address is david@tradeafter.com. And to find out more about what I'm doing with social trading with Aondo, if you go to tradeafter.com, there's a bit of stuff on my website there. But we'll wrap things up for today. Have a good afternoon, and let's see where we all are again this time next week. I don't think we'll be at 1.5 pound against the dollar though, but let's see where we're going. Okay, have a good week. Bye bye.